Ladies and gentlemen, Fleet colleagues, my name is Steven Schoofs, Chief Editor of Fleet Europe, the specialized media platform for international car fleet leaders, and I have the honor to welcome you to this Fleet Europe webinar, organized in association with GE Capital. GE Capital is one of the leading international car leasing and fleet management specialists, and we are very pleased with their support and willingness to share their expertise. Fleet Europe brings information and shares knowledge about international car, and we do that through different channels. We have magazines and guides, online activities and newsletters, training and events. With this webinar, we will dive into a fleet management topic in a less time-consuming but more efficient, informal and interactive way. The information shared today within this webinar is subject to disclaimers, which can be viewed in detail via the recording of this session, which will be shared afterwards on fleeteurope.com. The theme of the webinar is Trends in Today's Car Fleet Management, a very interesting theme for our first webinar of the year. In order to optimize your fleet management best practices and your car policy strategy, it is highly recommended to benchmark your strategy from time to time, and this by having a look at some key principles of your profession before diving further into the deep blue ocean of fleet management. We all know that making mistakes in life, in business, is quite normal, as we are all humans, but detecting them, admitting them and learning from them is a way of intelligence. This is no difference in international car fleet management. So today we will have a look at trends in fleet management based upon the key results of the first ever industry-wide survey on car fleet policy. And this survey was conducted by the end of last year by GE Capital. About 80 companies have answered the survey, and this car policy survey explores the common challenges and opportunities facing fleet professionals. In total, the 80 companies that have responded to the survey manage in excess of 150,000 vehicles. In total, the webinar will take 45 minutes and is divided into three main parts. After my introduction, Mr. Lutz Hansen, lead buyer fleet management at Bayer Healthcare, will give insight in several key trends from the 2013-2014 car policy survey, and he will explain how those key trends have impacted the fleet management at Bayer. Afterwards, Mr. Alex Barbero, European Account and Consultancy Director, will take us into the future by reflecting on the possible impact of two main trends on our business. We will end this webinar with a short Q&A session. As a participant, you are free to send your questions for the expert speakers by using the chat function of the webinar tool. Please indicate to which expert speaker the question is addressed. So, ladies and gentlemen, it's now time for our first expert speaker, Mr. Lutz Hansen from Bayer. Lutz,
thank you for
the screen is yours.
Thank you, Stephen, for the warm introduction to bring me onto that. I will pick up some of the trends that you have mentioned of the survey, and as well a thank to GE to have that done this year to really do a global car policy review and how we as fleet managers or fleet purchasers can benefit of that. So basically the first topic I would like to look at is driver behavior, and as well, why are we looking on the driver behavior? So the driver himself, by his more or less right foot, his behavior in the car is going to have direct impact on damage and claim costs by being too quick, eventually hit a wall, in a worst event even hit a pedestrian or even another car. We have direct impact by the damages on our safety ratio and thereby by our corporate social responsibility, which we want to tackle as well. And furthermore, by his driving behavior on the mileage ratio, he has a direct impact on the costs at the end of the contract, either by the mileage or even by the circumstances and the ditches and scratches he causes to a car. What do we do on the different elements? On the first side, on the damage and claim costs, we start with driver training more and more across various countries, either behind the wheel or with online trainings, in order to ensure that we increase the awareness about what the driver might affect on the car. On the other hand side, we try to bring in the right equipment to the people by assistance systems in the car, park distance controls to avoid damages and claims. But this has as well a very positive impact, thinking about safety in a certain direction, because as soon as we increase the awareness and decrease the damages and claims, we can cause a better cost ratio and thereby being sustainable as paying into the direction of safety and decreasing the cost for the damages, which is a good trade-off and that we really see as a sustainable approach. And last but not least, driver behavior has a direct impact on the fuel consumption, which is definitely an area where we have to look at, which leads me to the next topic of fuel cards. Fuel card solutions, why do we look on that and what is an impact on that? So we can get first information, at least on a high level, through the fuel card, especially on the fuel consumption, the mileage, and even the fuel type a certain driver is using, if he is doing that correctly, yes or no. The alternative out there in the market might be a fuel card directly through a leasing company or a fuel company or a credit card, at least to get the best level of transparency to perform desktop researches around the globe. The relevant data, as mentioned, are on the one hand side expenses, and yes, I'm coming off the area of procurement, so I have to look behind the costs. We have to look at the fuel usage. Is there really the right fuel used? Either if there is a diesel available, a hydrogen car eventually, or even electricity, so that we get a proper overview of what we do globally. And last but not least, to steer a fleet globally, and we are talking within by about a tiny amount of more than 27,000 vehicles, we have to look on the mileage to have a good control together with our leasing partners around the globe if we use the cars in the way how we expect to do that. And looking in all these data, there is a certain benefit to safeguard our total cost of ownership, the TCOs. So we can reduce the fuel consumption by detecting the drivers who are consuming too much. We can adjust the contract mileage over the lifetime in order to reduce our cash out to the reasonable level. And furthermore, whenever we detect cars which are not really in line with the best cost ratio, and if they drive to less, we can have a look on alternatives in our fleet to go more in the direction of shared mobility, of other mobility solutions, whatever is the best solution. So the question is, are we doing that just locally? No, we are not. We are taking up intentions from the various countries, bring that to regional level, and try to implement it even globally. So we take up the best solutions from a local level, try to adopt that in a region, and once it's implemented in the region, we try to bring it over to the other parties on global level, into the other regions that we have defined, in order to implement it on the adopted level possible in the country. The major factor on that is the maturity of the markets. We have to be well aware that Asia, Americas, and Europe are totally different, and even within the regions, the country might have another maturity level. To get the best from a local level to a global level is at the moment for us a good solution, the mobility solution that we are implementing in Germany, where we are acting more on a car sharing scheme, sharing our learnings with the countries within Europe, implementing that more and more in the countries, and then try to bring it even to the global scale. And as mentioned, we have defined 3 regions, Americas, Europe, and Asia, where we'll have a fleet council discussing all the topics that we detect and try to bring it on the road on local level. Going further, what were the benefits that we could identify by reviewing the market locally and bring it to a regional level? One of the major topics is the different funding methods. And why are we looking directly into the funding methods? We're talking about 50% of the fleet costs, regardless what kind of funding you're using. Basically, 50% always is your cost on that. And acting locally, we increase the discussion into alternative solutions. In America, example, is the open-end lease. Here in Europe, we are talking more about the closed-end relation with the leasing companies. And in Asia, we often still have buying schemes or other financing methods. So yes, if we have a full service leasing opportunity in the countries, we try to put it in place, review the different market maturities or situation which might have major effect on the interest rates. And if an interest rate is not as interesting for us because being rather cash rich, we might go for an own funding with residual value guarantees from the car manufacturers. And depending on the region, we even review alternatives like cross-border sourcing to find the best country where we can finance our cars, to use them even in another country based on the legislation in the country, so that we are trying to divide more and more the alternative of the financing of the car and the purchasing process, because they are linked together just by a car, but at the end we are talking about 2 different products. And once we have that in place, it leads us directly to the area of the possibility of to do a combination of buying and leasing. We might even cash out only the funding part. Last but not least, it leads us to the opportunity to unbundle the one or the other service, which might be reasonable, but at the moment, for the time being, at least our view is we try to bundle as much as possible towards our valued suppliers and partners in that business in order to reduce our process complexity. The second biggest portion that we have is fuel, which leads me to CO2 emissions. As said, CO2 emissions are directly linked to the fuel costs, which represent 25 to 30% of our costs. In the past, and many of you know that, we already performed the bioclimate program that led to more than 25% reduction in our CO2 emissions, which represents in a fleet of 27,000 vehicles a multi-million saving per annum, which is reasonable to go for. As we had a major success on that, we even defined our targets already for 2020, which is in line with the authorities around the globe. We have defined the target on the target of the authorities in Europe, US, China, and Japan, and taking our fleet split into consideration, it leads us to an average that we want to achieve for all the cars coming on the road in 2020 of only 110 grams per kilometer for all passenger cars. And this is again another 25% decrease compared to the actual average CO2 emissions. What is good about that, it's not just being green, it's also reducing money. As said, it leads to a multi-million euro savings program. Furthermore, it also has a positive impact on the residual values. So by choosing the right vehicles today, you will benefit of that in the future by having a better residual value within your fleet. And often forgotten point is taxation benefits. If you select the right cars, depending on the country, you will be able to make an over-year saving per car of about 300 euros at a maximum that we have identified so far in Europe. So it's valuable to look on the taxation country by country and thereby make the right selection within your fleet in order to do the right things. And furthermore, to be clear on that, as we see that as a major success, we performed in the last years always our evaluation on CO2 to be part of the carbon disclosure paper. And even this year, the reportings on the CO2 emissions are the first time ever part of the annual report as an integrated report, including sustainability in our annual report of the Bayer AG. Looking further, as we already mentioned, TCO, as the major two portions are, on the one hand side, the funding method, on the other side, it's fuel. We also take into consideration for our budget setting all other services like maintenance, tires, and even further, we now start to look on life cycle analysis to review what might be the cost of the behavior of the driver in case of a damage. Therefore, we have to perform more and more detailed analysis about the damage structure and our insurance costs in order to ensure that we know what might cause a decision for the one or the other manufacturer during the life cycle. And if we talk about the budget, what have we identified as prices are varying rather often, even half yearly or yearly, we have to adjust the budget over lifetime in order to ensure that we are in line with actual discounts, actual residual value changes, and even the taxation country by country. Whenever you have a user-chooser fleet, a combination of the TCO and the budget has to be performed so that you can define your budget on the TCO level with the right reference cards to ensure that the drivers get what you need. Last but not least, to be mentioned, whenever you talk about the selection list, we are going more and more in the direction in order to make our selection list based on the TCO assumption. And furthermore, not to forget the driver, we implement more the perception factor on a car as well in order to see how can we influence our drivers to do the right things, to have a good decision based on the environment, cost, and people. These were the topics I wanted to touch on, which leads me to a short recap. As you have seen, we are looking more and more in a strategic view, which leads to the necessity that we consider third-party operational management of our fleet more and more, so that we can focus on the decision-relevant processes and getting less administration into our fleet. As you have seen, taking global approaches down into the countries with the regional adoption based on local initiatives which are running at the moment, which leads to very reasonable and good results. Make use of all the available solutions in the region. Start to think out of the box. Take your colleagues from travel management as well into consideration if there might be a reasonable solution for your fleet. As said, CO2 remains a major topic with a very high impact on our fleet. Safety is getting more and more important. Be really open-minded. Take everything what you find in the market and try to implement it as one of your solutions in fleet. There's not one solution fitting all. And basically keep active, regularly review the market circumstances to identify your opportunities for your fleet, which help us a lot to create reasonable and sustainable savings within fleet or even further and better in the area of mobility. So these would be at least my major topics looking into the car policy review of GE, which really helped us to get a good insight into the markets.
Thank you, Lutz. Thank you very much for your expertise and your comments. I think it was really interesting how you have explained the link between the main fleet management trends of the car policy survey and your policy at Bayer, that we saw which interaction that there is. But now let's look forward also, and it's Mr. Alex Barbero from GE Capital, who will now give his vision and the vision of his company on two of the main fleet trends that we have seen, and he
Thank
will
you.
take those into the future. Alex, the floor is yours.
Thank you, Stephen, and thanks a lot, Lutz, indeed, for a very good insights on the report that we published a couple of months ago. So yeah, we just wanted to discuss and have a quicker insights on global fleet management. One key trend, obviously, that we've seen from this car policy survey. We at GE, we believe that it's a key macro trend. It's something that is the next big thing for the fleet industry, as we believe, and we feel good about it, I must admit. And GE Fleet is a true global operations. We do have operations, obviously, in Europe, but in America as well, and in Asia Pacific. What we believe we're going to see in global fleet management, and we actually start to see that for now a couple of years, but what we think is that the global fleet manager will come to us as an industry and will ask us what they asked from a European perspective, at least I would say 10 years ago. And I think they will ask us two major things. They will ask the industry to provide a global reporting capabilities, and they will ask the industry the capacity to provide some insights and provide some cost value add services based on those global reporting. So we at GE, what we are doing as we speak, we launched a revamping of our reporting capabilities, and we think not we think, but we're gonna deliver at the end of Q3 2014 now new global dashboard that will not only give the opportunity to the global fleet manager to see the GE assets, but as well to upload any other third-party information from their fleet. And next to that, because data without, I would say, consultancy or value-add services is not much, or it's not the maximum at least we can do. We are as well beefing up or increasing our capabilities in consultancy. We do have 20 consultants in Europe today in the fleet space, about 20 consultants as well in the fleet space in the US, and we are increasing resources in Australia, Japan, South Korea, and India as well, with the aim that with that capabilities, we should be able as a fleet player to provide value-add services and value-add advice to global fleet managers. And what we start to see as well in terms of advising customers, we believe we can provide some global cost out support in the range of, for example, the OEM concentration, or as Lutz mentioned as well, providing insights around the funding methodology. What works well in the USA might not work well in Europe, or vice versa. So that is for the global fleet management what we see, and definitely a key trend in which GE Capital will invest heavily in the next couple of years. So now maybe Stephen, you can go to the next one. So we wanted to have a deeper conversation on this TCO and fuel management concept. It's not a new trend, I would say, but if we look at the statistics we've got from our consultancy division here in Europe, over the last 6 years, we produced thousands and thousands of studies for our customers or some prospects as well, and 20–25% of the studies always around how to manage TCO, CO2 capping, and fuel management. So that will continue. I think we'll continue to see how we can maximize the sourcing of the right assets, the lowest CO2 assets possible. What we believe is that in the future, as an industry, we're going to need to focus more on how we could influence as well the drivers, the users of those green assets, to actually use those assets in the most green and efficient ways. So we already invested, at least at GE Capital, in pan-European tools, web-based training to encourage the drivers to eco-drive. But we believe as well that telematics should be better leveraged by the industry. We are starting pilots in that domain. And telematics will give us the opportunity to have a much better insights on the way drivers drive and whether or not they do adopt an eco attitude. So in a nutshell, fuel management, yes, will continue to be a key focus, but I think that we're going to see more of focusing on how we could, as an industry, influence the drivers on managing the fuel spend when they drive. So I think, I mean, this is basically the two topics we just wanted to highlight a little bit further from a G. Steve, maybe I can give you back the floor now and take some questions.
Okay, thank you very much, Alex. Thank you very much for your expertise and your insights. As you said, we are now going to move to the third and last part of this webinar. It's the Q&A session where the participants have the opportunity to ask the expert speakers some questions by using the chat function in the webinar tool. And I'm quite sure that the participants have already learned a lot, but perhaps they have still more questions for our expert speakers. And so I want really to ask you all to send your questions that you would like to ask. Of course, it's perhaps not possible that we will treat all the questions, so I, as the moderator of this webinar, will select the most appropriate questions for our expert speakers, but I'm sure that Lutz and Alex are also open to discuss for further elements and issues with you on one-on-one online after this webinar. So if I look at the questions that we have already received from the audience, here is a question for Lutz Hansen. Lutz, one of the key trends is around the use of fuel cards. And you have mentioned that fuel cards are really a good, let's say, solution to optimize the transparency in your fleet management. But can you give us a little bit more knowledge about how we can create transparency if there is not yet such a thing as a global fuel card? You know, you have to use different suppliers, so how can you be sure that you have the right transparency? How do you do that?
So basically, we are using, wherever possible, a fuel card solution that is managed through the leasing companies, and we collect all the data from the leasing companies into one single global tool. So there's definitely a direct connection between the leasing companies and the fuel cards. Wherever this is not possible, we take local solutions of fuel companies wherever they are available, because somewhere in the backlands of Siberia or in the jungles of Brazil, it might be difficult to have a fuel card in place. If we can't do it with a leasing company, we get the same data from the fuel companies into our tool as well, in order to ensure that we have a full transparency. And last but not least, whenever we can't have anything as a fuel card in place, we just launched our new global car policy, which clearly states the last alternative is a credit card. So that will not deliver directly 100% the solution, but overall it gives us, in most of the countries, a very good indication where we are, so that we really get the transparency on what is happening in which area. So there is not yet one solution globally, and I'm happy to see that GE is working on a global fuel card, which is eventually more a credit card than anything else, because being open and honest, a fuel card itself is not much more as a credit card, but unfortunately a normal credit card does not have all the fields that we would like to use in order to get the data about mileage and the fuel type. This is only a thing for the costs, but if you have all the information together, you might use good average results from detailed analysis to do desktop researches and ask the right question to the countries wherever you don't have a card in place.
Okay, thank you very much, Lutz. Alex, I don't know if you want to add a comment on what Lutz just had said, or else I go to the second question.
No, not really. Let's go to the second question, Steven. Yeah.
Okay, no problem. Alex, again, with regard to fuel management, you are an expert, you have quite a lot of international fleet clients. In your view, when we talk about fuel management, we often see that there are different kind of solutions that are possible to manage, let's say, the complete story of the fuel. And so the audience would like to know, what do you think is better? Is it better to focus on driver behavior? Is it better to focus on, for example, the selection of low emission vehicles? Is it better to focus really on the deal with the fuel supplier? Or is it, let's say, a complete package that you have to deal with?
Yes, yeah, I think I'm going to take the easy answer, Stephen. In all fairness, I think it's the complete package that, as an industry, we need to focus on to reduce those fuel costs. They kept, increasing. So, but what I would say, my view is certainly you need to have the basics in place. So, I would advise you need to start by having a very clear car policy, trying to go and get the lowest CO2 assets out there. But then indeed in parallel, and we see that happening more and more here at least in the European space, try to put in place some policies or training that will incentivize your drivers to adopt an eco-driving attitude. What we've seen on some of outcome of the program we run, the web-based training we run across Europe, we see that companies can save net of technology between 3 and 7% on their fuel bill when they run such programs towards their drivers. And the last part around negotiating further your supply chain with the fuel provider, I mean all our customers are experts in the field of sourcing, and I'm sure this is something they do, e-auction or not, but they try indeed to optimize and to leverage their fuel spends with their fuel supplier. That is as well an axis that should be looked at.
Okay. Lutz, can you perhaps just give a short comment on how you use, let's say, the different solutions that there are to optimize the complete fleet fuel management aspect in your fleet policy?
So I think the 3 pillars that you mentioned were really nice. So basically, yes, based on a TCO, we select the most efficient equipment, so the right cars in place to reduce the CO2 emission and thereby our fuel consumption. Then the next level, trying to find the best commercial deal in place to get a fuel card either through a leasing company or from a fuel company directly. And last but not least, it's once we have the best commercial deal and the best equipment on the road, educating our drivers and showing what their behavior is causing cost-wise, and wherever applicable, depending on the situation with unions and workforces, even try to create all what is in the market, like competitions, and having the drivers benefiting as well from a good behavior with certain fringe benefits if they are the winner. Mm-hmm. So yes, you're right, it's a full package that has to be implemented.
Okay. The next question is about globalization. And I would like to start with Lutz. Lutz, the question that I've received here is, well, how, if we are talking about globalization, how do you and how can the audience make sure that decisions, or let's say the principles given at a global level, are supported and implemented also locally? Indeed, it's a fact that it's not always easy, for example, when you have the decision at a centralized level to really implement it also in an efficient way on a local level. What do you do to make sure that on a local level the guidance that you give more centralized is also done?
So the magic word behind that we call internally stakeholder alignment. So before we take the decisions, we try to collect as many local requirements as possible, make the lowest possible consensus on global level, which gives already a guideline which is going to lead in a global car policy, where we define the minimum criteria that have to be implemented locally. And the good thing about that is that we are getting more and more in the situation that we collaborate not just as the fleet managers or the sourcing colleagues for the fleet. We also collaborate more and more in the area of environment and sustainability, as well with our HR colleagues in the direction of compensation and benefits. And not last and even not least, it's the travel management that we take into consideration to find the best solution that we can implement, adopt them slightly if needed locally, because as I said, we perform quite a lot of desktop researches globally, which we use to challenge local markets. And if there has to be an exception in place for good reasons based on good TCO analysis or even market requirements, we take them into consideration and allow the one or the other exception if we see commercial benefits. So we are rather strict in the policy globally, but whenever there might be a certain thing where we have good reasons in the markets by even legal requirements, we take that into consideration and don't force the people in the direction which might occur even issues with our business lines.
Okay, thank you very much, Lutz. Alex, I'm turning also this question to you. What would be your tip, and how does GE sees, let's say, the opportunities and perhaps also the obstacles that there are when a client of yours that is going to have, let's say, a global fleet policy now wants to implement it locally? What is your tip for them to do it accurately?
Yeah. So look, we'll mention exactly what Lutz just indicated. It's if you want to make sure that your regions or your countries will follow you, just make sure they are part of the decisions from day one. And what we've seen, we gave support to a couple of global customers on some global initiatives, and the most successful are those who basically put in place some global team from the start, with representatives from all the regions, and they invested a lot of time up front before starting the actual analysis, and what we see, those one are the most successful when it comes to the implementation. And one piece of advice is, and we've seen that from some of our customers, or we apply that as well within the GE world, is use the strategy of the coalition of the willing. So if you believe as a team you've got the right decision from a global perspective, you start to implement it with the team or the countries, the regions who understand and who are willing to implement, and further gain the support from the remaining at a later stage.
Okay.
If I may, I would like just to add sponsorship of the highest level in your organization is highly required, which even led in our organization, especially on the E&S side, to very good results as we turned it from not just a fleet issue to a strategic fit to the overall company strategy.
Okay. Lutz, another question for you. In your, let's say, recap slide, the last element there was focusing on reviewing the market circumstances. The question here is there any ideal time frame for doing that? Should it be like at least twice a year? Is it every month? Is it once a year? What is your opinion on that?
Unfortunately, there's no global answer on that. Looking into the North American market, I would say yearly is fully enough because they depend on the model year. Looking into the European market, it might be, depending more on the South European market, more a yearly review. Looking more in Middle Europe, it's more a half yearly. And even if I look in the development, at least price-wise, down in the German market, it might even be needed quarterly to ensure that you do the right things at the right time. But you have to find the right balance between the complexity of the review, especially regarding TCO and budgets, and the efficiency you can create. So it's not a good advice to do that even on a monthly basis, because the complexity of the review might be too high, and even the reaction time of a certain organization might be too low to get a monthly review on the road. So therefore, be aware a review takes time. Implementation takes time, so less than half a year might even be of danger unless you are in a very volatile market.
Okay. Alex, do you have anything to add to the answer from Lutz?
No, I think Lutz is absolutely right. You need to bear in mind that you know, fleet cost out or new fleet policies, it's not a small job. It's serious. It's heavy to analyze sometimes. So you need to make sure that when you start something, you will get the right benefits for the investment. So indeed, less than yearly might be too much investment for the returns. So I think Lutz is spot on that one.
Okay, a last question that I have here is about safety. Well, safety, damage claims and insurance, they are never far away from each other, and the audience, it's quite interesting. They want to know how you can be sure that when talking about insurance and dealing about insurance, that a bundled service is better, for example, than a self-insurance option. How do you see that, Lutz?
So interesting-wise, to give you a very quick feedback from at least Europe, yes, I can confirm insurance is one of the hottest topics that seems to be rather untransparent if you are in a bundled solution. And basically also to think of, in this case as well, GE, we are elaborating at the moment the data about insurance costs on the one hand side compared to real accident costs. So eventually the golden way might be something in between. Take the third-party liability wherever you have to implement that, and as soon as your fleet is just big enough, review a self-insurance scheme where you might learn something about investment of insurance, which is definitely also not easy for us. That is at the moment really being reviewed. So we don't know the final solution at the moment, but we still believe the service is going to come through a partner in the market. We might have the one or the other deal behind that, but if we are going to remain in the position to invest regularly in an insurance, might change rather quickly, because at least my stomach feeling, and that's just my personal thing at the moment, shows that self-insurance, if you are big enough, is far more in favor than spending quite a big amount of money towards an insurance. It might change if you come down to smaller fleets, where even a risk of a stolen car might be that big in a self-insurance scheme that your own budget might be destroyed. So that's on the one hand side, depending on your driver behavior, and risk evaluation has to be performed to make the right decision. And there's a major factor of the amount of cars that you have on the road, what decision is going to be better for you.
Okay, thank you very much. I see that we have passed the 45 minutes, so we are going to end this webinar on the key trends in fleet management here. I want to thank the audience, I want to thank the speakers, and of course GE Capital for their support. As you see on the slide, a recorded version will be available after the session, so you can find it on Fleet Europe website. If you are interested to receive the report of the survey that GE Capital has conducted on the car policy benchmark, then you see there the link where you can find it. And of course, after this webinar, you will receive a thank you email with also a little survey, and we hope that you can take the time to complete the survey and share your thoughts into what you would like to hear in the future, and also that you can help us to improve further webinars. Thank you very much, everyone, and I wish you a really nice day. Bye.